Hello, welcome. I'm so excited to be here with you today. What I want to talk to you about this week is the order of operations in your business. This is really important because you don't want to be stressing about stuff that is way down the line for you, 5, 10 years out, when there's already enough to do. Most people who start a business get a little overwhelmed, and the first years are the hardest, for sure. Okay. So let me paint a scenario for you. This might feel familiar. You're like hanging out with a group of friends, and somebody has maybe just taken some action in their business and they're very excited about it and hyped, and they're kind of like wanting all their friends to do the same thing, right? So a friend might say to you, "Oh, yeah, you really should form an S-Corp. Yeah, it saves you a bunch of money, blah, blah, blah." And they tell you a couple facts that they know about an S-Corp. They may or may not be correct. Or they tell you, "Oh, you need an LLC. You got to get an LLC," right? And they may or may not know the reason why they have an LLC or what an LLC is for. And yet you are left after that conversation feeling like, "Oh, okay, I guess I need an LLC. Oh, I guess I need an S-Corp." And unfortunately, what I see from my side on the tax side is that a lot of people form LLCs and form S corporations when they're not necessary. And also without knowing what they're actually doing for their business, like without knowing what the benefits are to them and if there even are any. And that, my friends, is a waste of your time and a waste of your money. So I want to clarify when you need these things so that you don't do that. Okay. All right. What you want is to be at the right level at the right time, right? We want to right size your order of operations. You don't need to do whatever Tony Robbins is doing today, right? Tony Robbins is running a much bigger business than you are. And you don't need every bell and whistle that he has. He might need those things and you do not, right? You want to do the thing that's appropriate for your business at your business's current scale and level, and to reach the next level, not 10 levels above you, just the next one. Okay. And I say this, oh my goodness, as a person who, as my husband, my business coach, basically anybody who knows me well knows that I tend to want to plan 10 steps down the road, and I get stressed about step number 10. And I always have to be reminded, like, hey, you know what? Let's just worry about step number 1. So I am definitely recording this episode as advice to past Hannah. So if you're feeling like past Hannah right now, I hope this helps you. Okay, so I hope it's obvious, but I'll just say it in case it's not. Please don't take business advice from random people on the internet, random friends who don't actually know where your business is at, or just people who don't know necessarily all the technical details of why they made their own LLC or S-Corp. Don't assume that your friend did it for the right reasons, because I'm telling you from my perspective, a lot of people form them way too early and have no idea what they're for, and they don't have any benefit. Okay. So here's your order of operations. As we discussed in last week's episode, the very first thing that happens in your business is the moment you advertise. In other words, the moment you signal to the world your profit motive, through, your website going live, through sending an email blast saying, "I'm available, you can book me," sending the show invitation to your show where people can come and buy your work. That is advertising. That is the signal of the moment your business starts. Okay. For a lot of you, it's your website going live or you sending out your first email blast. And that is the beginning of your Schedule C. That is when your Schedule C starts, is meant to start. Okay. And that's important. You want to know that. The reason, of course, that the IRS is the one that starts first is they're not going to sit around and wait for the day that you feel ready to form an LLC, right? Because the IRS is in the business of tax collection. They want a piece of their money as soon as you start making it. And so that is why the IRS is there first. Okay. Now, LLCs for legal protection, you can do that right away if you want to and if it's appropriate, but you don't need to. There's no requirement that you become an LLC in order to start your business. Most businesses don't start with an LLC. They start because they got a 1099. Like, that's it. So it's okay. It's okay. And can be wonderful to start your business with a lot of intention and assess your legal liability right up front. And if you know you need it to form the LLC, I have nothing against that. That's great. But what I want you to do is understand what the LLC is for and only form it if you need it, and form it when you need it, right? Not years ahead of time, because it does cost you money. There's an annual filing fee with an LLC. And you just want to make sure, that you have it because you need it and not just because a friend said to do it. So the LLC, the role of the LLC, I've had a million podcast episodes and you can go look at the archives for the detailed version of this. But the short version is an LLC is about liability protection. An LLC places a legal shield in between you, the person, and you, the business. And so it creates a legal separation. What that means is if you get into a lawsuit, if somebody sues you, they can still come after your business assets in that lawsuit, but it shields your personal assets from a lawsuit, okay? And most people's wealth is personal, and so that is a big deal, right? It means they can't come after your 401k, your car, your home, your kid's college fund, okay? That is the role of an LLC. So if you have liability issues in your business, if you feel that a lawsuit is a possibility, then an LLC is a good idea. Talk to a lawyer. It's a legal thing, and it's a lawyer who will form an LLC for you, FYI. Now, a lot of people form LLCs because they think it's needed just to be a business at all, and that simply is not true. So don't do it just because you want to be, quote, official. Do it because you want to protect your personal assets from a lawsuit. That's the reason for an LLC, okay? So you may not need one at all. And then the other tip is, since we're talking about liability, business liability insurance often can do the same thing as an LLC for you, but for a lower price. So you might want to consider business liability insurance instead of an LLC or in addition to an LLC. All of this is going to depend on your level of liability in your business, okay? Of course, if somebody does sue you and they're successful, even if you have the LLC, you will have to pay damages, and you might want business liability insurance, for example, to help you pay the damages, right? So it's definitely can be appropriate to have both at the same time. I have both. I at Sunlight Tax have an LLC and I have liability insurance as well. Okay, but it can be a good idea to talk to an insurance broker and talk about your liability with them. I find that insurance people tend to be able to come up with all the nightmare scenarios. Also, lawyers are good at that party trick as well. But talk to an insurance broker and just see what kind of insurance might apply to you and if it's necessary. Okay. Okay. The second thing that you need, so Schedule C is number one. It comes first. It's very fast. It usually comes before people realize. Bookkeeping is the next thing, and bookkeeping is a requirement. Okay, so you want to do bookkeeping, and you want to do it early and often. Now, bookkeeping doesn't have to be super complicated. 2 episodes ago, I did an episode about why most people's bookkeeping is much more complex and expensive than it needs to be. So feel free to click back 2 episodes to check out that episode if you want. But basically, bookkeeping is required by law when you have a Schedule C, because you have to, by law, report your gross receipts. So you have to report all the income that you make in your business. But the cool part, because you are a business, because you have a profit motive, you're entitled to take deductions. So your expenses for running the business are deductible, which means if you're going to deduct them, you must track them. Bookkeeping is where you do that. So you must track your gross income. You have to report all of your gross income. And then if you're going to take expenses, you have to report those as well. And the difference between those two is called profit, right? When you subtract your operating expenses out of your gross income, you get profit, hopefully, if it's a positive number. And you might get a loss if it's a negative number. Bookkeeping is how you find those numbers, and it's how you track all the ins and outs of your business. So it's required, yes, but it's not required that you do it on software or a specific software or that it's really complicated. Those 3 elements are all that's actually required. You can do that with a spreadsheet. I, to this very day, in my painting practice, still track my books on a spreadsheet because my painting practice just frankly doesn't have enough activity to justify a monthly software expense. So this is why I developed like that spreadsheet system for you that's inside Money Bootcamp. It's based on the actual way that I track my own stuff in my painting practice for taxes, so that I can track everything I need for taxes, right? Because that's really the only reason I need books when it comes to my painting practice. Last but not least is the S corporation. You do not need an S corporation. Okay. The S corporation of all of these things is the last consideration. Okay. I hope you assess your liability early on in your business. Some people don't get it going immediately. You can wait a little bit. The S-Corp is something you don't want to do too soon. You actually would rather wait than do it too early. And I say this having seen many, many, many people form S-corporations and then lose money on them because they do it way before they break even on them. Okay. So again, I have many episodes about S-corporations, but the quick summary is once you make a certain threshold of profit, not gross income, but profit. So money left over after all your expenses. Once you make a certain threshold of money, say around $50,000 minimum, then you might begin to consider forming an S corporation because an S corporation can save you money on self-employment tax. So when you file your business on a Schedule C, all of your profit is subject to 15.3% self-employment tax. And on top of that, income tax, and state income tax as well, if you live in a state with taxes, which most are. And an S-Corp can save you money because only a portion of the money that you bring in your business is subject to 15.3%. We don't call it self-employment tax anymore when you have an S-Corp, but essentially the numbers are the same, payroll tax and Medicare and Social Security. So less of your money is subject to that 15.3% Medicare and Social Security when you have an S-Corp, but it costs money to have an S corporation, and there's a lot of legal obligation. So when you're an S corporation, you have to run payroll, you have to register with your state as an employer, and you are subject to employment law now. Even though your employee is you, you're not allowed to legally mistreat your employee, or you're in just as much trouble as if you mistreated someone else. So people don't understand how serious that obligation is. And I've seen people do things with S-Corps that make me feel very nervous for them. Another thing you don't want to do when you have an S-Corp is pay yourself a salary that is unreasonable. In other words, underpay yourself very dramatically. That is a very fast track to an audit. So it's very important to assess what a realistic and reasonable salary is for someone doing the kind of work you do in your business and actually having proof that that's a reasonable salary. So there's some boxes to check when you form an S corporation. But once you have a high enough threshold of income, it might make sense for you and it might save you some money. But understand that you're going to be on the hook for employment, registered as an employer in your state, subject to employment law in your state. You're going to have an extra tax return to do, one that will cost you money, and you're almost certainly going to have to hire an accountant to do for you, and it will cost more than a personal income tax return, which is all you have with the Schedule C. And it also gives you an earlier tax deadline. Your S corporation return, your 1120S, is due March 15th. So it moves your tax deadline up a month. So all of those three things are very, very important to know about having an S corporation. There's also some other stuff, like you're stuck with it for 5 years, so you can't like flip it on and off. You have to stay in it for 5 years. What was the other one? Well, and you can be audited if you pick a salary that's too low. So there's things you really have to understand. There can also be regional differences between S-Corp rules. So for example, if you're in New York City, an S-Corp doesn't make sense in New York until you make a much higher threshold of income. And so another thing you want to do if you're deciding you're ready to have the conversation about an S-Corp, you're ready to do the due diligence that's important, is you want to be talking to somebody who has expertise on S-Corps. Sure, that could be me, but go ahead and just call somebody local as well. So you want to know what your local rules are. For example, if you're in New York City, you don't want to just listen to your friends who are in Pennsylvania because the rules are different in Pennsylvania than in New York. And if you didn't know that, you might form an S corporation that could have made sense for a Pennsylvania resident, but makes no sense for a New York resident. So these little details are quite important to understand. All right. Awesome. Okay. So what I want to do here is just a quick review of what we talked about today, the order of operations. So to summarize, your Schedule C is immediate. As soon as you advertise is the moment your Schedule C starts. So that one is the earliest one. And that makes sense because the IRS is in the business of collecting taxes and they're going to be there day one so that the minute you make $1 of profit, they're there for the taxes. Okay. So Schedule C is first. Bookkeeping should coincide with your Schedule C. I find a lot of people don't realize this until a little late in the game and we play catch up with bookkeeping. That's pretty normal. Don't feel bad. But your bookkeeping should coincide with the beginning of your business. You want to track things from the beginning because you can deduct them. So it's positive for you. Okay, so business is next. Bookkeeping is next. LLCs, not necessary off the bat unless you have crazy liability issues. And if you do, talk to a lawyer. Lawyers are the ones who form LLCs. Most lawyers choke at the idea of you going to LegalZoom for an LLC. And part of that is that there are real individual differences between businesses and reasons you might want to talk to a human being. Okay, so that's the LLC, not necessarily necessary, but important if you've got liability enough where you might be sued and you want to protect your personal assets. Next, we've got business liability insurance. Now, you can get that without having an LLC. That might be very important for you as well. And remember, that will help you actually pay damages if you are sued. Nothing about the LLC is going to pay for the damages. It's just going to shield part of your money from being subject to damages. Okay, so liability insurance, pretty important, something you might want to take care of on the sooner side of your business, probably even before you form an LLC. Last but not least is the S corporation. This is not necessary. You can wait a long time and it is okay to wait several years. And in fact, you don't want to form an S corporation too early in your business. It's very important that you wait until you have enough profit where it makes sense, where it actually saves you money to have an S corporation. I have seen people form S corporations way too soon and actually owe more money for the expenses of upkeep for the S corporation than they saved in tax. In other words, they lose money by forming an S corp. So don't just run out and form an S corp, please. All right. So I hope that order of operations has helped kind of sort things out a little bit for you in your mind so you understand what comes first, what comes next, what is optional, and what is not optional. All right. Awesome. 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 Oh, and the last little details, an S-Corp is something you file with the IRS. So that is actually a tax thing. That's an accountant thing. That is not a lawyer thing, unless your lawyer is a tax lawyer, right? That will be different, but probably more expensive. All right. Thank you so much for listening, everybody. It's great to be here with you. Bye. Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.